Well, hello, investors and traders. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets, and we're doing it from a neoclassical perspective. That means each time we ask ourselves what happened today and what might it tell us about the coming days. I do a show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. If you haven't subscribed, you can. It's easy. It's free. You just hit the subscribe button on the top right-hand side of the screen there, and anytime content's pushed, you'll get a notification. As far as what did happen today, if we pop over to the boards here, another nice big spike up today. The problem, and actually we'll take a look at it, but the real problem that's forming here is you've had like five out of the 5 days you've had 4 gaps up, or actually with the day it's 5 out of 6, I think. You've had large percentage gains. Of course, we had huge push down, and so on a extension point of view, right? Things are getting pretty extended now with these moves up. The other thing I'd note is the Russell underperformed today, and the small caps have been kind of the leading edge of what's going to take place next for a good year and a half. It's primarily because they're tied to movements in oil and the effect on banks, regional banks in particular. And so I'm wondering if the small caps is trying to give us some sort of sign tonight. We'll look at the charts and see if we can make sense of that. Gold gets whacked. The DAX actually gets over that swing point low, so the high of the low, making it a retest regen. Another one that's pushed over. Of course, we're back over it again here on the NASDAQ and the NDX. You had the Nikkei up. You had oil up a good piece again today. And so in general, a nice, big, strong push one more time. So let's take a look at the charts. And we're going to start over here on the DAX. And the reason for that, of course, is the DAX has been one of the key markets I've been watching. And what I'm trying to do is determine, right, and neoclassically determine whether or not this is simply going to regenerate lower without getting any higher. Now, it's done that over and over again. You've had pushes on prior swing point lows. For example, if we take this swing point low, it didn't get back over the top. Here it is getting back over the top. If we go back a little farther, it did and then failed again. So we're over the top. You want to see one more day print up there to kind of tell you it's real. But usually when you get over the top, more than likely it's probably real. You just want to see that extra print. And then if we look at the NDX and NASDAQ here in a second, you'll see what I'm talking about. So the DAX does get over it, but I would caution here that it's been a straight up move. And when we go to the currencies, you're going to see the other side of this story in terms of what may happen. Also, you've got declining volume on rising price. As it comes into these key levels, volume's not there, but they do get over it. So, all in all, yeah, it's positive. Does it mean we're just going to rocket higher? I don't think so, and I'll expand upon that as we go along here. Let me take a look at Switzerland. Switzerland was the one that wasn't able to get over it and still isn't. The Swiss market, if there's a tell in Europe, seems to be the Swiss market just can't rise. Part of that's on the pressure of their currency. Of course, currencies are driving a lot of things right now, so we'll look at currencies next. And the Hong Kong market pushes up and is trying to go for a swing point high. Again, pretty good rise already. No volumes here, no volumes anywhere, quite frankly. If we pull over and take a look at the U.S. market, so I'm going to start with the NASDAQ now. I was just referring to the retest regen zone, and that's what we had on the NASDAQ. And if you remember, we got over it and then pulled back the very next day and couldn't get back over it for 2 days. Well, today you pop over it, right? And now, when you start looking at these, now you have to say, okay, this swing point high is going to be the next target. Do you have any volume? No, you don't have any volume. You haven't had any volume, right, compared to what you're going into. But, if you get over it, you get over it. And if you want, and you want to really be bullish, you could draw this out and say, hey, wow, this thing is fixing to do a nice big ABCD structure, take us all the way back up here to that swing point low. Well, that may be the case. I'm not going to say it can't be. All I'm simply going to say is when we get to the currencies, I'll show you why it may not be the case. But as far as right here, you can't. You got to stick your head in the sand if you want to call this bad action. It's good action. It's doing what it should do. You got the same thing here on the NDX. If you look at the S&P 500, S&P 500 goes after the swing point high today. That price point was 1947.20. You close this thing today at 1945.50. So you're going to try to hit it and get over it tomorrow. So that's going to be the test. Now I want you to take a look here in terms of the test. Look at this bar here, right? Pretty decent volume. You got volume shrinking over here. You put those two together, draw them across. That's going to be two bars you're trying to get over. It's going to be hard to get over on both. I suspect this thing's going to probably fail tomorrow and probably try to come back in here and consolidate some more. So that's just my sense of what's going to happen. And before I move over to the currencies, let me show you the Russell. The Russell, as I said, was a little weaker than the others today. The Russell has gotten over that B point, if you're doing the ABCDs. The problem is you're doing ABCDs and a counter trend move. That's a pretty hard ABCD to complete, especially when it's this steep. But I've seen enough V-shaped reversals to not ignore the possibility of a nice big spike continuing. But having said that, let's go to the currencies. And I will start with the dollar here. The dollar. So if we look at the dollar, and I'm going to pull this on 2 time frames. But if we look at the dollar, right, you've got a retest regenerate zone there. Came into it today, closed up underneath it. So in other words, the low here was, and this is after more than 6 bars, and this is what it should do. The low was 25.27. Yeah, you got into it, you close at 25.26. So the first attempt to get back in there is attempting to regenerate to the downside. So that's the dollar. And if we look at on the daily time frame, right? If we look at it on the weekly time frame, over here, you've actually got the push up into the swing point low here as well. That point is 25.27. It's the same on both. So in other words, you're trying to test into what is resistance on both time frames, and that's hard to do. And then finally, if you want to look at it in a more bullish perspective, right, the dollar has been bullish now for quite a while, and it's still up there hanging. You had this breakout way down here. You never came back to retest. Dollar's still hanging at the highs. You still got a high up there. Hasn't been tested. Doesn't have great volume on it, but the volume's not too bad. But it's a range trade, right? Dollar's in a range trade. And if you're looking at it from this long-term perspective, the dollar's kind of in the middle of that range, a little bit to the bottom side of it, but it's hanging in the range. So dollar can certainly go higher, potentially. And there's nothing in these charts that tell me it's not going to do that. As it comes back up here, it's retesting. It's going to try to pull back a little bit, but longer term, the dollar may, in fact, get stronger, not weaker. Now, a stronger dollar makes the euro weaker. A weaker dollar tends to make the euro stronger. But if we go over to the euro, the euro came back and it's doing the exact opposite of what the dollar's doing, and that is the euro's coming into the retest regenerate zone, and it's coming back in with a bullish retest regen. So it's trying to regenerate higher, which should be bad for those markets. Now, we had a PMI number today in the U.S. It wasn't that strong. It was weakening, but it didn't do much to the currencies. In other words, the dollar really, although it did pull back a little bit by the end of the day, it wasn't a big pullback. The assumption here is that Draghi's going to do something major in March. We're only talking about 2-3 weeks, and so this is a reflection of that. I think tomorrow is going to be a good tell as to what's going to happen here. If I just look at this purely from a neoclassical standpoint, technically, more than 6 bars, first time back, doesn't have the volume coming into that bar. This thing should try to go back the other way. And finally, if we look at the yen, right? Yen also strong. Yen trying to push the dollar lower. You had a nice big move up, a pullback, and now you're trying to make another move up here to the highs. Whether the yen can actually skyrocket again, I'm not so sure, but certainly there isn't any easing in this. And if you remember, Mr. Abe over there decided he was going to push rates negative, and that was going to be the next story in the QE fight of inflation. And what happens? They reverse this and take it right back the other way. I'm sure that's not what he bargained for, because he wants lower currency. He wants a devaluation of his currency. But right now, the market is not giving him what he wants. And right now, the market, if anything, is saying, hey, we're going to keep trying to push this higher. You can see it here. And finally, if you come to the long-term charts, it's a pretty good push into the swing point high on a monthly. If you get over the swing point high, right, then that gives you the opportunity, and you're right at it, gives you the opportunity to finally go back up and test swing point lows. And folks, that's another 7% if it makes that run. And believe me, that is not going to make the Japanese market very happy. So that's the setup there on the currencies, and the currencies are the primary reason for me not being so bullish. But the other reason has to do with time. Neoclassical really tries to look at time, volume, and price. It's simply an attempt to be quite logical about how you go about things, right? And that's what this is. And you just had a compressed move. So, again, just look at your numbers, right? You don't have to do a lot of math here, but 42 to 45, that's 350 points, and we did it in what, 5, 6, well, we're basically 3 days here kind of sideways, but you basically done it in 6 days, right? So you got 6 days, well, 7, I guess, if you take the bottom here. So you got 7 days, you come off, you do 300 points, you do 7%. So you're doing 1% a day. NASDAQ doesn't usually move 7 days, 7%, one after another, 1% a day. That's compressed, right? I mean, look at any of these others. Now, here's a compressed move to the downside, and you can see that a compressed move can carry a lot longer than you think. There is an ABCD structure potential here, and so we can't ignore it. But at the same time, when I look at the currencies, I look at a fairly compressed move. I look at we're going against the trend, not with it, both here and on the weeklies, right? If I bring the weeklies over, it's the same thing. You're going against the trend, so this is a counter trend trade. That kind of a move typically is not going to push without some sort of an interruption. Now, I know over the years we've gotten so used to, something like this, which is what we've talked about before, is V-shaped recoveries, where you spike down, you spike right back up. And I know we've seen enough of these where we can't ignore them. And, if we do this one, I guess we could call it to here. Can this thing just run right back up? Yeah, anything's possible. But folks, we're late in a move. We've got a lot of damage in a market. We didn't have that those 4 years that we saw V-shape after V-shape, right? We didn't have those. You didn't have all this damage. We also didn't have, the economic picture quite as bad as it is now, the model economy. We didn't have the damage with all the currencies. We didn't have some sort of questions with the central banks that we're seeing now, right? Questioning whether or not they can really do something about all this. It's a game of confidence. A lot of the confidence right now is pretty shaken. Now, I assume if they get this running fast enough and far enough, then everybody will have to just turn on the heels and run with it. That's typically the way it works, right? Because it's a crowd thing. But I still don't think we're at a point where this market wants to run higher. As a matter of fact, even though we can move higher and probably will move higher before we break down again, I do expect we're going to see these levels break. It's not yet, but it's coming. That's it for tonight, folks. Have yourself a great one. You tell a friend, tell two. I'm LA. It is and was your daily NeoTA wrap. Have a great night, and I'll see you next time. Good night.